Securities offered through Kestra Investment Services, LLC, Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC, Kestra AS, an affiliate of Kestra IS. Capital Advisory Group, Inc. is not affiliated with Kestra IS or Kestra AS. Neither Kestra IS nor Kestra AS provide legal or tax advice and are not certified public accounting firms.
You work hard for your money. For the next hour, you're going to learn how to keep what's yours. Capital Advisory Group presents Keep What's Yours. Here is Josh Gilbert and Jeff Zufall.
Welcome to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall. He is the Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Hello, Jeff.
Happy Saturday.
And I feel like I'm just having more and more questions to ask you on the weekends. I'm jotting down notes, things throughout the week during the Heidi show that, I say, you know what, Jeff, would be great to talk to about that. Things are just coming through. Is it because it's the beginning of the year and everybody's starting to,
everybody's got taxes in mind and they're kind of thinking it through, and it just seems like it's your awareness, what's going on. But it does seem like lately it's coming at us like a fire hose, just data, weird stuff that's taken place, but that's where we're at, unfortunately.
And we always say, do not do and file. Well, you can jot down rough numbers, but do not file your taxes too soon.
No, the first filing day, I believe, is January 23rd is the first day that you can actually e-file a return back with the IRS. So again, the odds on, give you an idea, last year I think it was February 8th or 10th. So this year's the 23rd. So you need your W-2s to at least start the process.
Right.
And they're technically not supposed to be out until 31st.
And again, I'm going to complain, but there's nothing we can do about it. The government knows what I owe them.
Pretty much, in a roundabout way.
Why don't they just send me a bill? But
that's your postcard concept.
Yes.
If you remember, Trump stood out there with it and said, look, your taxes will be on this postcard. And we laughed back then and said that's impossible. And to today.
You laughed.
Yes.
Yeah,
I laughed.
Because you're in the industry. I'm sitting at home saying, finally, the man says something that I can get on board with, whatever he said on that bus to Billy Bush, who cares? Give me a postcard, tax bill.
Check the box and sign it and send it back.
And it never happened. It doesn't matter if it was Trump or if it's Obama or if it's Clinton or if it's Bush or if it's Biden. It's not going to happen. And what's the reason why, Jeff?
There's too many lobbyists that are throwing tax code. They want their little appropriated dollars put out there, so they'll give a tax cut here and a credit there, and that's why. I think Mississippi, actually I guess he's the governor-elect possibly, has now said, I think he said just the other day that Mississippi is going to try to follow Texas and Florida and do away with their actual state tax.
Okay.
But, you ask yourself, is that, a vote grab or is he real?
Right.
I don't know how a state would move from not collecting state tax to, going, hey, we're going to do it all on tourism or something.
So here in the state of Missouri, it was right around 5%, and then there was a surplus?
Yeah, there was a surplus 20. I guess the surplus was 2021, so they voted in as I think the max state tax is 487.
487.
I believe is the high end, and it works its way down just a little bit from there. But typically, use 5% as your rule of thumb.
And we look on our paychecks every 2 weeks.
Yes.
We look at the end of the year. We owe federal tax and state tax. There's a state tax on my paycheck stub. That's what we pay to the state. It's only 5%, but, every little bit counts, right?
Exactly.
But in the state of Florida, in the state of Texas, it's zero.
Zero. There is none.
And the question, well, how do they
I don't know about
what is my 5% going to Missouri paying for that Texas and Florida have covered?
Florida, I know for a fact, it's tourism. So if you ever go on vacation, look at your hotel bill.
Tourism tax.
It's a tourism tax. That's it.
Yeah.
So
and up and down the coast, whether it's the Gulf side or the Atlantic side, there's resorts,
hotels galore. So they've offset huge that way.
I get it.
I don't know about Texas, though, honestly.
Texas is a big state.
Big state, but it could be that
it out.
Maybe the Gulf area has some weird tax.
Maybe an oil tax.
Oil tax could be.
Maybe. Those Middle Eastern countries, I don't think they have taxes on their...
No, that's the lure to get you to go to Dubai.
Yeah. No taxes.
But it's 190 degrees every day. But
yeah, and, probably a cheeseburger in Dubai probably costs,
$40.
$40. Yeah. So, you pay for it somewhere.
Oh, yeah, most definitely.
And then the state of California, what's there? Hawaii's the biggest.
Hawaii
right?
was like 12.7, I believe, the craziest tax out there. California is right behind them, 11.7, 11.6, I believe, state tax.
Yeah.
And
so
Manhattan is a close third. So.
Well, that's why people are saying, I'm moving out of California because the taxes.
There was something I saw on Twitter the other day, and it showed it was kind of cool. If you press the button, it showed the migration of people out of California, and it showed it like a direct line to each city in the country.
Oh, that's cool. Anybody come here?
There was just a little bit Springfield, Missouri, but none in St. Louis.
Interesting.
So Springfield, Missouri, I don't know if somebody moved, like a company moved to Springfield. But
brought all their employees with them?
Yeah. Springfield, Missouri was the only, Kansas City had some, but most of it was East Coast. So they literally went across the country.
Oh, really?
Yeah, it's kind of wild, but it did show this, from like just Central California. They didn't really pick like a city, but just Central California as a state. And it just kind of shot out across the rest of the country.
And I know Centene was talking about putting a headquarters in North Carolina. I know North Carolina has a lot of businesses.
That was kind of a threat to the city of St. Louis
to
get
like
it together.
That. Yeah,
I think it was a true threat.
Yeah. To get the crime in order,
or
else we're moving.
Yeah.
It did kind of seem like that. But it is that time of year. Do not file too quickly because you don't have all the proper numbers.
Yeah, you don't have the numbers, the paperwork yet. If you have just W-2 and it's short, sweet, and simple, 23rd your day, more power to you. But if you have bank, interest from the bank, nobody can really write off mortgages anymore, from an itemization standpoint. And remember, 2021 was the last year that we could do the non-itemized charitable contributions. So you got either 300 or 600. That does not exist anymore.
Doesn't exist.
So don't try to put it on there because it won't accept it. The other thing is, remember, in 2021, we had stimulus money, a lot of it, and we had child tax credits, like each kid was worth $3,600 or $3,000, depending upon their age. We don't have that anymore. So there's going to be a lot of people that are shocked when they do their tax return for 2021, for 2022, because those credits and that stimulus that the government was giving you do not exist.
Yeah.
So your refunds are going to come way down from where you're at.
Wherever you stand on the political spectrum, wherever you stand on the, I'm a liberal, when it comes to your behavior, but I'm a conservative, fiscally conservative person. Wherever you stand on that, I do miss that money.
Yes,
I do miss that child tax credit money.
Believe me,
$300 every month. That was fun.
It was real fun, but it's not going to be there today. And the child tax credit drops back down to the $2,000 level that it was originally.
Yeah, for everybody listening, for years, you've been getting that.
Yeah,
they just bumped it up.
They just bumped it up through. Technically, it was supposed to be at the height of COVID. Our great elected officials on both sides couldn't get it together, and that's why it took so long to get it. That's why it was July to December. It should have been January to June or something like that.
And they wanted to continue. Well, at least the Democrats wanted to continue that kind of inflated child tax credit rate, but Joe Manchin
killed it.
Yeah. He was. You all remember.
Yep.
He was the holdout.
Yep. He was adamantly against it for whatever reason.
So it never went through. So now we're back down to 2,000. So there's a lot of stuff out there, and I think here's the idea. Let me give out the phone number, 636-394-5524. We don't know what to do with all of this stuff.
Yes, there's a lot.
And you always say that, you could spend your weekends getting all your tax stuff together, crunching the numbers, waiting for my E-Trade statement to come through, not the initial one, but the final one.
The final.
Because what happens is you got an E-Trade account or a Morgan Stanley account or whatever, they send something to you at the end of the year, but they also send something
to the IRS.
And if it doesn't match up,
typically it's the actual total dollars of the trade. It's not the basis, because the IRS may not know the basis on one side. But if you sold $100,000 worth of shares, whether it's 10 transactions or 100 transactions, your gross proceeds need to match what's on that 1099.
Everything that I get paid at work, a copy goes off to the federal government. Yes. Everything that kicks off a 1099, whether it be I sold something on eBay and I got a 1099, which that
they put a little off.
Yeah.
It's a year delayed for they want to see what the response is. So it defaults back to the you have $20,000 worth of revenue or 200 trades before that 1099K gets kicked off. But in case you get some, there's an easy way to work around that and a couple different factors. So give us a call. We can help you. We can help you through that.
But just to put a fine point on it, dot the I's, cross the T's. Everything that you get that's either 1099 or whatever, there's a duplicate copy at the at the IRS.
Sitting out there.
So if you don't include one of those things,
that generates that letter.
You'll get a letter. The IRS will start getting angry.
In the past, it was 12 to 14 months you would get a letter. IRS said your return doesn't match what information others have provided to us. Hey, what's the deal, basically? And then you have to respond. Those letters now are 24 months-ish. And so literally there's stuff out there that it will take a year for them to respond to you. It will take 6 months to a year before you get a response once you rebuttal. So it's a 2-year process to get anything resolved.
Right.
And
so
a lot of people don't realize that. They're like, hey, you have a special hotline. You can call the IRS. I have a preparer hotline that they weren't answering for
even for
a year.
The preparers for a year.
They just started answering it now, but we have a suspicion that's only to gear up for the season. And it's not, hey, here's my technicality. It's more, I have this form. It won't transfer to this form. How do I make it get there? And that's the preparer hotline side.
So to circle back to my original point, the government has all of this information, whether it's from your E-Trade or your Ameritrade or your work or your this or that side business that you had going on. They have all of it.
They have all of it.
So why don't they just send me the bill? They want me to put it together to make sure I'm telling them everything I need to be telling them.
So here's the one that's going to be the kicker for 2022. Did you participate in crypto?
Oh, no.
It's a yes or no response. But if you did, check the box yes. And again, with FTX, it may be a little bit because of the wranglings that are going on. They will have the answers to the test, which means if this really does go through a full bankruptcy proceeding, everybody that was a client will be a creditor. They have your name, so they know that you're on the list. And if you answered no, I didn't have anything to do with that, but yet your name's on the creditor list at FTX or one of these others, you're in trouble.
Yeah.
So
you have to include everything. So number one, don't do your taxes too early and send them off because you might be missing a thing. And Jeff, you said sometimes they don't even send them out until mid to late February.
Yeah, the brokerage firms are getting really good at sending a preliminary statement, and it says nothing of any great substance, but they've fulfilled the January 31st deadline, basically. And then you have to wait until they send you the revised, which is the real one.
Yeah.
So
instead of spending 2 or 3 Saturday afternoons getting all the tax stuff together and crunching the numbers and doing them over again, and then, something else came in, you know, that Monday, so now you got to go back and redo everything. Instead of doing all of that, just compile all the stuff and take it into Jeff and let him do it. And I got to tell you, number one, I don't know anybody who wants to do their own taxes. Number two, I don't know anyone who can competently even do their own taxes and have the numbers match up. But the third one, I mean, that time of year, mid to late March, that's when the weather's starting to get nice.
That's right.
I don't want to stay inside. I got a kid. Let's go outside. Let's play catch. Let's feed the ducks. Let's do something. Why would I want to do that when you do this for a living?
Yes.
You'll do it right. You'll do it for me.
Yes.
And whatever bill you sent me last year for it, just a couple $100.
Yeah.
I mean, that's worth
easy
my
peasy.
That's worth my free time and my sanity.
Yes. Well, that's the question. If you TurboTax, I'm not going to knock it. It serves its purpose, but the cost of buying TurboTax, the cost of your time to sit there at the end of the day, what's it worth to you?
Yeah. So I mean, my wife, she just gets like into the weeds on this stuff, gets flustered, and it starts coming back to, I look at my son and he looks at me and we're like,
run.
We're going to get out of here. Why put yourself through that when Jeff can do it for you? 636-394-5524. So that's the idea of that. It's, it's tax time, whether you like it or not.
It's here.
It's here. Nobody's should be submitting their taxes yet, but they should be getting their stuff in order. So just sit tight, put all your stuff together, and when you've got it all, go in and see Jeff, 636-394-5524, Capital Advisory Group. Let's go to a commercial break, and when we come back, a lot of stuff to get to.
Oh, there's a lot of stuff.
Like I said, it's the new year. Everyone's talking taxes, so stories are just hitting up from left and right. So we'll get into it here on Keep What's Yours. It's the tax show here on the Big 550 with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group, trying to convince you that doing your own taxes yourself is next to impossible. And if you have a small business, which is what Jeff specializes in, if you have a small business, Jeff can look at your books, can make sure that what's in the black stays in the black, what's in the red gets smaller and smaller.
Smaller and smaller, yes.
Yeah. Make sure less goes out, make sure more comes in. He can help you with that, and at the end of the year, do your taxes for you, because I got to imagine if you opened up a flower shop, it's probably because you love flowers, not because you like to do payroll.
No, not at all.
Right? I'm going to open up a company just so I could kick off a tax return.
Yeah, and worry about your quarterly, sales tax and
right. It's like my wife wanted to open up a bakery because she loves baking, and well, who's going to do the books? And then they'll look at our faces. Oh God, these are the things that we don't think about. We get into small businesses. We get into opening our own companies. We want to be entrepreneurs because we have a passion for something.
Yes,
but there's always a book process, paper trail, all of that stuff. Jeff can handle it for you. 636-394-5524. So we can get back in the kitchen, get back to cutting the flowers, and get back to doing the good part of owning your own business and let Jeff deal with all the headaches. We'll go to a commercial break, and when we come back, more of Keep What's Yours on the Big 550 KTRS.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.
Back on the Big 550 KTRS, back to Keep What's Yours with Jeff Zufall, Senior Tax Strategist and Wealth Advisor. And I love that about you. Capital Advisor Group. It's Jeff Zufall. Here's the number real quick, 636-394-5524. Just Google Jeff Zufall. I'm sure he comes up. Capital Advisor Group. You've got a wealth advisor.
Yes.
And then, halfway across town, you've got a tax guy.
Mm-hmm.
Why wouldn't you hire someone who does both?
It's the theory. Everything that you do in your financial life will end up on a tax return, either yearly or at some point in time.
So why wouldn't I make one trip to Jeff?
Exactly. And make sure that they're right. And no offense to the brokers out there, but the brokers, their job is to make you money.
Their job isn't to worry about your tax liability.
They're not going to say, oh, if you make this trade, you're going to owe this. And we see that every year.
And I hate to say it. They don't care what your taxes are going to be because they don't pay them.
Yeah, they're not writing the check. They don't see at the end of the day what the net effect is on your tax return. And the issue is you may have other items on your tax return that are big ticket items that happen that same year. And kudos for the reps making you money. But at the end of the day, you need to know how that affects your tax return, because then you stumble into our office and, say February and go, here's all my statements. We add it up and go, hey, you owe a ton of tax.
Yeah.
You should have said something. And then, everybody's pointing fingers at one another. So that's the concept is if you do that, we make the trade. We know what the tax.
Exactly. And I hate to say it. Let's start out on one end of the spectrum. Maybe the money people out there, they don't care about your taxes because they're not the ones footing the bill.
Yeah.
Okay, that's one thing. Is that great? No. But how about this? They don't want you to maybe take some money out of your account to account for your tax bill that's coming up, because they make money off our money. So if you lower your money that you give them to, offset some tax issues,
exactly,
they're not going to make as much.
Yeah.
So maybe they won't even tell you about your tax liability because they would make money if they did, or they would lose money.
So one of the things that we see is they will have people, hey, go take the taxes from your Social Security payments and don't take from here, from these brokerage accounts, just so that it limits the withdrawals on the brokerage account side.
Right.
And I've seen that 4 or 5 times.
And the question is, do you want someone who doesn't care about your tax liability? Or do you want someone that knows what your tax liability is but doesn't want to lose a buck?
Yeah.
So they're not giving you the proper information.
And the concept is we'll lay it out, say, here's what you owe. If we do these trades, or as we go forward, the one thing that I just did the last about 5-6 days, estimated payments, they're due basically on Tuesday the 17th. Typically, we're due Sunday the 15th.
They're all due on the 15th, just like April 15th. And then
Monday's Martin Luther King
there.
Day.
Okay.
So banks are closed. So then you get the next day, which is the 17th. So we're rounding up everybody that's self-employed that we might have made stock trades on that we sold the winners, unfortunately, and created a gain, and kind of plotted those off for estimated payments that would be due next Tuesday. So if nobody told you that they made a giant trade and it created a gain, because people have owned stock for years, sitting on it, pent-up gains, you sell it, boom, that's a capital gain the year that you traded in. So,
yeah, and you've got to prepare for that.
Yes, and be ready for it.
Jeff, if I'm older, and hopefully by the time I get older, I have a lot of money just sitting in stocks and whatever.
Billions.
Yeah, millions. If I get older and I say, you know what, it's time to buy the boat, it's time to take the kids and the grandkids to Disney, which, by the way, it'd be cheaper to buy a boat than go to Disney.
It would be cheaper to buy a boat.
But you want to do it, and I'll just sell off some of that, Boeing stock that I have. My first phone call should be to you
before I sell it,
to say what's going to happen as soon as I sell this.
Yeah, and it's going to be X dollars in a gain, and here's how we address the taxes.
Should I sell half of this and sell something else? To mitigate my tax liability.
Because the game.
Hey, wasn't Disney fun? And then April 15th rolls around and I look, oh my God.
Wasn't that fun?
Not only did I take out $50,000, but now my tax bill is a couple $1,000s more. Holy cow. So that's the idea. That's the game. And I hate to call it a game, but it really is.
It's what it is.
It really is. And it's a numbers game. And
it's a numbers game. That's it.
It's just keeping up with the IRS.
Yes.
They are our competition, and I don't want to look at it in terms like that because I don't want people thinking that the IRS is terrible. They're just people in suits in a small windowless
office.
Huge windowless office crunching numbers. They don't know who Josh Gilbert is. They just know me by my Social Security number.
Yes.
But it really is a race. The book that you wrote, Keep What's Yours, How to Leverage the New Tax Law to Create Unfair Advantage Over Your Competition. Well, your competition is the state of Missouri.
Yeah.
Your competition is the federal
IRS.
Yeah. That is, and the more money you can keep legally from going off to them, where does it go? Oh, it goes in your pocket.
Exactly.
It goes in your bank account. It goes to Walt Disney. Because oh man, that trip's going to be expensive.
Walt's estate.
Yeah, Walt's estate. So it is that time of year, and I brought this up last year, but I want to bring it up one more time because I keep seeing more and more of this. The tax commercials on the radio. Hey, the IRS is coming after you. And then I see talking heads on TV shows saying that, these 82,000 employees that the IRS is hiring, they're just going after small businesses. And here, this is what I heard on the radio the other day. Have you not paid your taxes in 3 years? The IRS is coming after you. The IRS wants to hunt you down. Let's rewind it. If you have not paid your taxes in 3 years, why haven't you paid your taxes in 3 years? I would expect the IRS to be coming after you.
That's what they're playing on. They're playing on that emotion of, man, I can't sleep at night. And again, if that's the issue, just do the returns. If you can't pay, then you do an installment agreement behind it.
And that's what we talked about last year. If you can't pay, if you're scared, you don't know, call the IRS, get a payment plan set up. Because every time the day turns over, that's more money in fines and fees that you have to pay. You still have to owe them what you owe them, but now you owe fines and fees.
Yeah, and there's a very, very few people that could get basically where they'll waive the what you owe to the IRS. You see those on the late night commercials. You know, the guy stand up there and go, I owe the IRS $1 million and I settled for $29.95. You know, those are very few and far between.
It's not a realistic claim.
No, it's not, honestly. IRS, they don't care if you have an asset. They want you to sell the asset to pay them. So at the end of the day, that's what it is.
And in these talking heads on the TV shows, the politicians in their suit and ties and their pantsuits and everything, they're like, the IRS is hiring all these people to come after small businesses. And everybody loves small businesses, okay? I feel like it's a you just say, oh, well, small businesses in Washington, and you've got you're pulling at people's heartstrings. We love small business. We at the Big 550 are a small business.
Technically.
And
yes.
And we love to promote other small businesses in St. Louis because that really is what greases the gears of the American economy. But if you're a small business and you're not doing your taxes correctly, or let's be honest, how many people that you know own a business and they're probably taking money under the table?
Sure.
Or they bought landscaping for their house, and I let the business pay for it.
Yeah, business paid for it.
That is illegal.
Yes.
These are things that are illegal. And it's like, well, I pay enough in taxes. Okay. But, Jeff, you always say there are guardrails inside of the tax code.
Yes. As long as you stay within those guardrails, you're fine.
If you drive off the road through the guardrail and start having your company pay for your landscaping in your house, you are
run through the weeds.
You should expect to have the IRS calling you.
That's why when they audit, they come in and they start looking at the books in a sense, and we see that in a lot of the small business owners. Their attitude is, well, I'm profitable because I have money in my bank account. Well, not necessarily. You could be more profitable if you know your numbers on a regular basis going forward.
Yeah.
And so that's that setup as you go.
You don't necessarily have to hide the money. You
No,
just do your stuff have someone like Jeff look at your stuff properly and say, look, you're not maximizing your profits and you're not mitigating your losses.
Yeah.
So you can make more money to have Jeff look at it than just say, look, I'm bleeding money here. Let me just try to pay some people under the table so I can avoid my payroll taxes.
Exactly.
That's illegal.
Very.
Okay? Anybody should say, what if I cheated on my taxes? Yes, the government should come after me. If a small business does it, the government should be targeting them as well.
That's the attitude of people currently, and I think that's where the pendulum swings back around. May not be the next year or two, but at some point in time, IRS will get back on their feet, and they will be looking for money. And I think they're going to go after everybody. Small businesses, mid-sized businesses for starters, because that's where the easy money is. If you're a big business, again, they have the ability to hire attorneys, hire new accountants to go fight off the IRS before they have to write a check. Versus small business, if they show up and say, "Hey, you owe us $1,500," you write them a check for $1,500.
And they're not shaking people. The IRS isn't mob bosses. Frankly,
no, they have to. You have
they're
taxpayer.
Giant nerds.
There's a
with
taxpayer
pocket protectors.
No. There's a taxpayer bill of rights out there which says here's the order that they're going to do it in, and you have the ability to rebuttal, to disagree with them. You just have to have a case. You have to have solid grounds to stand on.
Yeah.
Sometimes, if you read some of these court cases that go on. It's just, there's weird ones that people like, hey, I'm going to write this off and get away with it. There's some that, yes, they have the grounds to stand on, and that the tax courts agree with them and say, no, we agree with the consumer. And the vast majority of them, they really don't have a foothold to stand on, and they just show up saying, hey, I claim my dog because, I paid health insurance for it. It doesn't count.
Yeah.
You can't do that.
And it's one of those things where the IRS will come to your small business and say, hey, did you do this? Well, yeah, I did that. Well, that's illegal, and you're trying to get out of your taxes. We know what you're doing. And the small business will say, well, you didn't come after me last year or the year before that. And they say, well, we didn't have enough people to do that. And then the IRS will say, wait, you did this last year too?
Well, yeah, you usually never say that. That's my first advice is don't say that.
How many years have you been doing this? You know,
At
because
least
they can go back as far as they want.
if
right?
they deem fraud, it's unlimited.
Yeah.
So, I mean, the question would be, and everybody asks this question, if you had to go back 5 years from 2021 and produce a tax return, could you? And if you produce that tax return, could you really understand what took place on it? I mean,
Right.
what you did
Yeah.
5 years ago, where the income was derived from, what the expenses were. And that's the question. Most people can't do that. Seriously. I mean, if I got quizzed 5 years ago, I have detailed notes. I could go back and prove it. But, again, it would take me a little bit to kind of
give me a minute.
Yeah, I need a couple of minutes.
So the idea is the IRS is hiring 82,000 new employees, and when we say new employees, a lot of those are going to replace old employees.
Well, so here's the funny part is you saw where the ad was circulating on social media that, the IRS had an ad out there, and it was, you had to be comfortable carrying a weapon in that type of stuff.
Why are the bean counters carrying guns now?
There's 2,500 reps that literally, for what they do, they should carry a gun. They should carry 2 guns, honestly. But there's 2,500 of them across the country. 500 of them are actually retiring this year. They have to replace those 500. That's where the ads came from.
So that number isn't – they're
Exactly.
not adding 82,000
Yeah.
employees. They're – half
that are all
of them are retiring.
gun-toting pencil pushers.
A lot of them are just, pushing papers around in the Austin office.
I think 45% are clerical, and that's what we want. That's the people that answer the phone.
Answer the phones.
That literally will
As a preparer, you couldn't get someone on the phone for a year.
Still can't to today, and that's the issue. And luckily, it's a little better. I will give them credit on that, but it's still not that good. I mean, again, their preparer hotline would ring and ring and ring and ring, and then you get put on a hold for hours, and then it hang up on you.
Yeah.
That's the prayer. That's not that we have this secret hotline to call in and go, hey, we need to know what this person's tax looks like. It's just, I have a technical issue. Can you help me fix it?
And they're not hanging up on you, Jeff Zufall. They're hanging up on you on my behalf.
Exactly.
I'm getting hung up on.
Yeah.
So let's be honest. I want more people answering the phones.
Yes.
Because if I have a problem, I need
you
to get
want
it resolved.
And not have to do and this is how archaic it is. You have an issue. So typically the way it goes, we file a return. Client gets a letter a year later from the IRS, and it asks for more detail. Okay? How do you get that response back to the IRS? The only way to do it is by U.S. postal mail, snail mail.
Who even uses the mail anymore? Christmas cards, that's all I get it.
Yeah, they've recently said you could fax it into this number. And again, at the end of the day, okay, you fax it. Our fax machine says that it was faxed on this time and this date. You don't know if somebody's really on the other side.
Yeah.
So it doesn't say.
There's an office at the IRS just filled with papers of
just falling over into a box. Yeah. So that's where it's just like, come on, somebody's got to be on the receiving end of that to acknowledge it, to send you a fax back to say, hey, we got it, something. And you're just in the dark, and that's the issue of the day.
Yeah, and so we talk about this all the time. We talked about it when it passed last year. We talk about it, and on boots on the ground as a preparer, as a person. There's nobody at the IRS. They're a year behind before they even send you the letter, and then once that process gets kicked off, it's another 24 months. And we're talking 3 years to resolve a tax issue.
And it could be something as simple as a $500 difference. It could be a $75,000 tax bill that's sitting out there. And it's like the client doesn't owe it, but nobody will acknowledge it because we can't get anybody to step up to the plate.
A reporter went into the tax office in Austin, Texas. There's 3 of them, right? Austin, Kansas City, and
Utah. Ogden, Utah.
And they went into the Austin office, and it really does look like boxes and boxes of papers everywhere. They can't even have lunch inside their lunchroom because the tables are taken up with boxes and boxes of papers. I think we need more people working at the IRS because for the preparer, I hired Jeff to say, look at my tax. He can't even get somebody on the phone.
Exactly.
But one of the first orders of business of this new Congress is they want to claw back the money to hire those 82,000 people.
So apparently the House has voted to rescind the billions in funding to the IRS. That was the first action that McCarthy did as Speaker. So I don't know if they have the power to do it. I don't know if it has to go from the House to Congress.
This money for the IRS, we talked about this. It was not in the Secure Act. It wasn't in the inflation bill, which doesn't have anything to do with inflation. You say that all the time.
Nothing.
I think this was
very good tagline, though.
Yeah, this was in the infrastructure bill.
Yes, it was actually in the infrastructure bill that slid out right there towards the fall of last year. And that's where we sit today.
It's already passed.
It's passed. It just
the House voted, the Senate voted, Biden signed it.
Yeah,
and they're shovels are already out.
Hypothetically,
doing things.
Yeah.
So I don't.
I don't know if this is
above our pay grade.
Yeah, way above my pay grade. I don't know if this is PR, good PR, looks great for their side.
Do you have to pass a bill to negate another bill? I don't
if
know
there's
how
a
it
way
works.
that they could defund it technically on the backside, I'm not aware of. But that's one of the first things that the speaker threw out there.
Gotcha.
So you go, huh? So, and then then speaking of that, the flip side of that is this was last week. The House also, not to beat up on them, but
second order of business.
The House voted to pass a new set of rules. Okay, and you got to listen to this because I read it the first time and it just went right on through, and I was like, oh, okay. That will severely weaken the ability of the Office of Congressional Ethics to investigate members of Congress for potential wrongdoing, including stock trading.
So the ethics office that looks directly at members of Congress.
Yes.
This is their only function to make sure they're on the up and up. They just got their kneecaps whacked.
Yeah, handcuffed them somehow. So, and I throw this out there because it's the biggest one that anybody knows about. Paul Pelosi, 4 days before a company called Navita, which is a chip manufacturer, when the U.S. put an embargo on chip importing from the Middle East, basically, he sold all of his shares at the top of the market. Nobody said a word to him.
Right.
So technically, you could go to Nancy and say, hey, you use insider trading, and she says, no, it's my husband's account. Well, they're husband and wife. They talk, guarantee
They
it.
file jointly,
joint return.
Sure. Yeah.
I'm sure that she said, hey, sell that stock, and he went, oh, okay,
Done.
and sold it. The other side of the equation, I don't know how true it is, that the members of the Federal Reserve sold their shares back, way long time ago, like at the peak of the market. And again, if you're an official running the Federal Reserve, should you really even have the ability to buy stock?
And
when you're
right.
running the economy,
isn't there like a thing where it's like a ghost thing that someone does it for you?
Well, they had brokers and accounts, but they talk.
Right.
So
hey Jeff, I just got all this information. Can you tell my ghost broker
to sell or buy this stuff? But like the president has a blind trust that runs their stuff. I think the only one that came out, and again, no offense to him, Jimmy Carter, was the only president that ever came out with his blind trust that lost its butt.
Oh, really?
Seriously. So,
wow.
And because
the more I learn about Jimmy Carter, the man's 90-something years old. He's still building houses.
He swings a hammer.
Yeah.
I'm like, I
still
can't even do that
houses.
in mid-50s.
You say all the time these people go into Congress, whether in the House, the Senate, or the White House, and they come out millionaires. Something's going on. Jimmy Carter comes out and he lost money.
He lost money. He was probably one of the only honest ones in there.
God, he only served one term, right?
Yeah, I think he did one term. That's it.
Can we get him back in there?
Well, I don't know. The 70s was not good economically. So.
You're right, true. So that's interesting. But they specifically said in this, we're going to hamstring the Ethics Commission so that we can start insider trading again.
Basically, and without any recourse.
It's the open secret in D.C.
Yeah, because, look, most of these people come in, they make either 181 or I think 218 is their
House
salary.
Or Senate,
yeah. And within 2-3 years, they're multi-billionaires. Most of them come in, the newly elected ones come in with good intentions, and I think they get sucked into the swamp.
And then they say, I can make some good money.
They make real good money, and then it's like, well, okay,
I mean, Jeff, let's get a campaign going.
Yeah,
Josh for House.
That's another campaign. Well, don't get me going.
Oh, the campaign. Oh, God, the campaign finance reform needs to happen immediately.
Hugely.
God,
huge.
it's there's too much money
as registered reps, we're capped at $99 per elected official per election cycle. That's the most that you can contribute. But if I'm a corporation and I'm not a registered rep, I can give whatever I want to give.
Whatever you want.
And
you can give whatever you want to a super PAC.
Exactly.
And they can give it
and
to your
turn
politician.
around and give, yeah.
I mean, that's a mess altogether. But this
whole
idea
other
of
issue.
insider stock trading, we hear that story about a couple politicians, I think, got snared up right before the COVID announcements where they shut everything down. They went and sold.
Well, because they were on part of these committees where they basically said, look what's coming down the pike. This is what's happening internationally. Be worried. And they literally walked out there, called their brokers going, hey, sell.
I'll be right back. They rush out. They walk to the door, and then they start running.
Exactly, running.
They call their brokers to say, sell.
Sell everything.
And that's illegal. Why are we letting we trust these people to take care of us?
But it's kind of
laws, and we're letting them do this.
Kind of like the job. But, I mean, I don't know how to stop it.
Right.
It's insane.
Yeah, well,
because if we did it, they know your trading pattern. They'd throw you in jail.
Yeah.
I mean, they'd say, hey, you sold these shares. How?
Nancy Pelosi's not in jail.
That's how Phil Nicholson got caught playing golf in Arizona with a buddy or a buddy's friend who owned the company, and they played 18 holes, on a Sunday or something. And like Monday or Tuesday, he mysteriously made these trades, made a ton of money, and then sold the shares like a week later. SEC picked his name up and came to him and went, how'd you know that? That doesn't fit your trading pattern.
Who'd you play golf with?
And he had to, and they proved that he played golf with the CEO of the company.
That's crazy.
And he had to write a check for like whatever his gain was plus a penalty. It was like $4 million.
Well, Martha went to jail for that.
Martha went to jail because she wouldn't tell him what she did.
Really?
She just refused to testify with information.
Can you imagine going to jail to protect someone else? God,
she's making pretty good money off that now with Snoop Dogg and all the commercials and stuff she's making. So
well, she got street cred now.
Yeah, definitely.
When Martha goes swimming, you can see her tattoos. But that's what Congress is doing right now. They want to kill the bill that already passed that hires more IRS agents. And Jeff can tell you, as someone who's a tax preparer, he needs to call them from time to time, and then nobody answers the phone.
We don't want a bloated organization out there that's just randomly attacking people, but you want an organization that can at least function, barely function at best, as we sit today. So that's what we're looking for.
Do I have anything to worry about if I just pay? You say guardrails. I hire Jeff to look into my stuff. You got us getting $1,200 back for our son's schooling. My wife's having things taken out of her paycheck that goes towards that, and it's all tax-free, so we get some money back on that. We keep a little bit more in our pocket. We hire you to find these things, but as long as we stay within the guardrails, do I have anything to be worried about with the IRS hiring more agents?
No, not at all. Small business owners are the only ones because, every small business owner is a cheat on their taxes. Just make sure
it's loosey-goosey,
you document what you do. I mean, to a degree. You may get in those gray areas every once in a while, deductible, non-deductible, so on and so forth.
I mean, I worked in restaurants. I've seen the owners pay, somebody in cash. I've seen that with my own eyes. It happens.
It happens.
Whether I think those people are evil or whatever, it's not up to me. Maybe that person that's getting the cash, maybe they're getting more because they're low income.
You don't know what's on the other side of that and what's going on in their life, So, but again,
as far as the IRS is concerned and the tax code is concerned, everything has to be documented for payroll taxes and the like.
Again, as a small business owner, as long as you can document, you are safe.
And small business owners, one more time, you don't necessarily have to pay someone under the table to avoid payroll taxes. There's probably dozens of other things you could be doing to maximize your profits, minimize your losses, and make sure that your tax bill is as small as can possibly be.
Exactly.
Keep what's yours.
That's it.
It's the name of the show. It's the name of Jeff's book, and it's the name of Jeff's lifestyle. Keep more of what's yours. Let's keep our stuff.
That's right.
So we don't have to give it to the government. And if you hate taxes and you hate the fact that the IRS is having 82,000 more agents added to the payrolls, and again, a lot of them are just replacing other people that are retiring.
Yeah.
If you hate taxes, call Jeff. He should be the first person you call.
Yes.
Because I hate taxes. How can I pay as little as possible legally?
Legally.
And then Jeff can walk you through it. 636-394-5800. 5524. Capital Advisory Group, Jeff Zufall is the senior tax strategist and wealth advisor. Let's go to a commercial break. When we come back, we'll wrap the show up. A couple more things to get to. Secure Act is out there. There's a savers credit for low-income earners.
Lower income.
Or for people who just started working. Yeah. I didn't start saving until I was probably 35. I didn't start, and I'm kicking myself because it's so late. Yeah. But the fact of the matter is, I wasn't making that much money.
Exactly. That was a problem. You had to pay the bills.
It's like, how am I going to save money for retirement if I can't even pay my rent? Yeah. So there's something out there for low-income, first job workers to save some money and get a kickback from the government. See, they're not all bad.
Exactly.
Not everything's all bad with the IRS. We'll be back right after this. Keep What's Yours with Jeff Zufall.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.
Back on the Big 550 KTRS, back to Keep What's Yours with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. 636-394-5524. I use Jeff when it comes to my taxes. Then we started coming to him for our financial and retirement needs as well. He can do it all under one shop. Why have a tax guy across town and a money guy down the street when you can just go to one trip?
Exactly.
One trip. So we talk a lot of taxes on this show. Keep What's Yours. Try to make sure that what goes out to the federal government, what goes out to the state of Missouri, is as small as possible while maintaining legal as possible.
Yes.
And whatever's left over can stay in my pocket.
Yes.
And then I can go out and either make investments with it or blow it on a bunch of candy.
That's right.
So it's up to me. It's my money now. But you're also involved in investing. We do a lot of taxes, but you're also involved in investing. There's a new savers credit that those stuffed suits up in Washington actually started passing down to us.
Yes. So this is something that's kind of an oddball one, but it's worth a lot. So let's say that you're either you may not, but your kids graduated college in September of last year, got their first full-time job, and if they could, and they may not have access to the 401k at their new employer yet. So, but if they do an IRA, and most people are like, oh, I'm going to do a Roth. If you do an IRA, deductible IRA, basically $2,000 of what they call voluntary contribution. So first $2,000 that you put in, you could get as high as $1,000 or a 50% tax credit on your tax return. So
say that again. So if I'm
low income or lower income. So the key
normally a lot of times our first job, we don't make that much.
You don't make that much, or you just started. So you really don't have that much for the year of income. So for 2022, because everybody's going to be doing the 2022 tax return here shortly, if you're single and you made $20,500 or below,
$20,500. So that's a low number.
Very low. So say you work 2 months, you could put $2,000 into a IRA. You get a 50% credit or $1,000 credited to you.
So this is for people, low-income earners, people who just started out. This is what I was when I was younger, got my first job, got my first paycheck. Do you want to contribute to your, HR? Do you want to contribute to your IRA?
You're going to say,
I know. Yeah, I'm barely skating by.
But
I'm going to Vegas and bachelor parties, all that stuff.
But maybe you want to, and here's why. Because again,
this is an incentive to do it.
Yes. So basically, it's $20,500, and then it will jump to, and for single. For a joint, it's $41,000 and below for 2022. So again, newly married, you guys didn't make that much money, but if you could put a couple $1,000 into an IRA, you get a credit. So it goes 50%, 20%, or 10% credit. So, but the kicker is, it's capped on the first $2,000 of the dollars that you put in. So if you put $2,000 in, you're going to get either 50% or $1,000, 20% or 10%. As a credit back on your return.
And this, I've asked you this before. The IRS incentivizes us to put money in an IRA They incentivize us to save. This thing incentivizes low-income earners to save. Is the government pushing us into saving because they're sick of taking care of us when we get
Yes.
old?
That's why with this new Secure Act that just passed a week or two ago, which we're still digesting all of the moving parts, they've greatly increased. I think there's 85 different retirement packages that they've put out there, and everything is increased in a sense to get people to put more money away.
Yeah. So I guess the idea is we cannot take care of everyone at 65. So here's an incentive for you to
get you to maybe
save
stay
for
off,
yourself.
stay off the roster.
So we aren't left with hundreds of thousands and millions of retirees and seniors that are living off Social Security alone.
Yeah, and if you look at your Social Security statement, middle way through the page, on the second page where it says what your numbers are, you'll see just two sentences. That's it. That's all they say. It's not highlighted. It's kind of in the same font as the rest, but it basically says, hey, based upon our projections, we'll be able to pay up to 80% of this benefit in the year 2025 and beyond.
Yeah.
So if you get $1,000 a month, you're going to get $800 a month.
So
now, that's a moving target because
right.
it depends upon what's raised in payroll, but
when it comes to this Savers Credit, this is real cash.
no, it's cash.
If you owe the IRS, they'll put
it right back in there.
They'll put it back in there first, but if there's anything left over, boom,
you
they
get
cut you a check.
Yeah.
And this just goes to, again, when I was my first real job, $27,000 a year. I was rich, and the last thing I was going to ever do was give any of that money back.
That's right.
In the form of savings in an IRA or anything. So I didn't even think about it. But now that I'm 40, 41 actually, once I hit 35 and I was getting married and everything, I was like, I need to save
That's
for
right.
retirement, and I really regret not doing this when I had the chance. Because what was I gonna miss? One more beer at the bar, one more, pair of shoes or something. So I wish I would have done this, and now the government is looking at it and they say, well, lower income people don't save for retirement because they don't have it.
They don't have it. That's the problem.
Let's try to incentivize them to save a little
So
bit
the
more.
concept, look at it this way. You put $2,000 voluntary contribution into it, you're literally going to get $1,000 back. So it costs you $1,000 out of pocket.
That's real cash.
Yeah.
All right, Jeff Zufall, we can find out more about this if your kids are low income because they just started a new job and you want to say, hey, how do I look into this? Does my son or daughter count? 636-394-5524, CapitalAdvisoryGrp.com. Keep what's yours. Jeff Zufall, so much information, and we'll do it all again next week.
You betcha. See you next week.
Bye.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.